The Fed is nervous. Trump wants to slash interest rates. But inflation is still on fire. And Wall Street? Watching every move, holding its breath. Job market is wobbling. Inflation refuses to cool down. And with Trump eyeing a comeback, he's pushing hard to juice the economy fast. But here's the problem. If the Fed cuts too fast, inflation could explode again. If they wait too long, the economy might crash. So what's really going on behind the scenes? What's Trump's game? Why is the Fed caught in a no-win situation? And most importantly, how can you protect your money and maybe even grow it in this chaos? Stay with me, because in this video, we're diving deep into what Moody's, Wall Street, and top analysts are predicting, and giving you the smartest investor moves in this confusing, dangerous, and opportunity-filled moment. Right now, the U.S. economy is sending mixed signals. GDP growth is slowing down, from 3.4% last year to an estimated 1.2% this quarter. The job market? It's not collapsing, but it's softening. The May jobs report showed unemployment ticked up to 4.2%. Companies are pausing new hires and layoffs in tech and finance are back on the rise. Consumer debt is a warning bell. Americans now hold over $1.3 trillion in credit card debt, and delinquency rates, rising sharply for people under 40. Housing affordability is near record lows. Why? Because even with home prices softening slightly, mortgage rates are still hovering around 6.5 to 7%. Meanwhile, big banks are cautious. J.P. Morgan and Goldman Sachs are saying, we're not in a crisis, but we're not in a boom either. It's a fragile economy, one big mistake, and the entire system could tip. Donald Trump, he's not just watching, he's pushing hard for rate cuts. His message is clear. Interest rates are too damn high. The Fed is choking the American economy. We need to stimulate growth before it's too late. Trump's goals: lower rates to boost home sales, make borrowing cheaper for businesses, bring life back to Wall Street, and, yes, heat up the job market again, all before the election. He wants the economy to look strong, real strong, by October. In Trump's words, Powell and the Fed should cut aggressively, do it now. But here's the real issue. Rate cuts could pour gasoline on lingering inflation embers, especially in rent, food, and energy, which are still painfully high for most Americans. This is where the clash begins. Now let's talk about the Fed. Jerome Powell and his team are walking a tightrope over a volcano. They raised rates aggressively in 2022 and 2023 to control inflation. It worked. Sort of. Inflation dropped from over 9% to around 3.4% by 2024. But in 2025, inflation is stuck. The last CPI report showed core inflation at 3.2%, barely moving. And Powell knows, if we cut too soon, we might lose all the progress we've made. And yet, he's under intense political pressure from Trump, Wall Street, and even some small business lobbies. So what's happening now? In their last meeting, the Fed didn't cut at all, not even 0.25%. They're signaling maybe one cut before the end of 2025, depending on data. But markets don't believe them. Futures traders are already betting on 2 to 3 cuts this year. The Fed is saying, not yet. Wall Street is screaming, do it now. And Trump? He's yelling at everyone. So what does all of this mean for you? Whether you're an investor, a saver, or just someone trying to make sure your hard work isn't getting crushed by inflation, this is the part that matters most. Because right now, the wrong move could cost you. But the right move could set you up for the next 5 years. Let's break it down step by step. 1. Watch the Fed, like a hawk. Next meetings, July and September. Now I know, Fed meetings can feel like boring press conferences with financial jargon. But hear this, these next 2 are critical. If they even hint at cutting rates, markets could jump fast. Wall Street is already pricing in optimism, but the Fed hasn't fully committed. If they cut in September, stocks, especially growth sectors, will likely get a short-term bump. But if they delay cuts into 2026, volatility is going to spike. Smart move, set alerts, follow Jerome Powell's language. Look for words like data-dependent and disinflation and labor softening. They matter more than headlines. 2. Lock in yield while it's still sweet. Right now, money market funds and short-term treasuries are offering over 5%. That's rare. These yields are only this high because the Fed kept interest rates elevated. Once they cut, that 5% becomes 3%, or even 2% again. So if you've got cash sitting idle in a savings account earning 0.1%, you're burning opportunity. Smart move. Consider shifting to Treasury ETFs, short-term bond ladders, or high-yield savings platforms. It's not flashy, but it's safe. And right now, safety pays. 3. Hedge with real-world assets. The inflation fighters. Inflation is not gone. It's just hiding under slower categories. Energy, food, and shelter are still expensive. So what do smart investors do? They don't run. They hedge. Gold still holds value when trust in fiat weakens. Oil and energy stocks? Those rise when supply squeezes hit. And blue-chip dividend stocks? They're the backbone. They give you cash flow while you wait. Smart move? Don't go all in, but have at least 25–30% of your portfolio sitting in inflation-resistant or income-generating assets. It's how you protect and still grow. 4. Real estate investors. Your window is coming. This one's big. Right now, mortgage rates are still around 6.5 to 7%. That's keeping homebuyers cautious and sellers hesitant. But here's what's likely. If the Fed cuts by Q4, mortgage rates could fall to 5.5% or below. And the moment that happens, buyers flood back, prices rise, inventory tightens. Smart move? Don't buy today in desperation. Get your pre-approvals, line up off-market deals, and be ready for that dip. This is not 2021. It's about timing, not hype. 5. Stay emotionally neutral, even when Wall Street isn't. This one's hard. Because the news wants panic. Social media wants predictions. But smart investors? They stay calm. They zoom out. They know markets move in cycles. And this one is at the pivot point. Panic selling during uncertainty kills gains. Jumping in blindly during a short rally loses discipline. Smart move? Stick to your plan. Think 6 to 12 months ahead, not 6 to 12 hours. Rebalance, but don't react emotionally. Because money follows patience, not panic. We're at a historic moment. A potential rate cut election year. A war between inflation and unemployment. A political storm brewing between Trump and Powell, and you. You're watching the whole thing unfold in real time. This isn't just noise. It's the start of a major shift in how the American economy will look in 2026 and beyond. So don't just watch. Plan, position, and protect your future before the Fed makes its next big move. Before the Fed makes its next move, be ready. Like, subscribe, and hit that bell so you never miss an update that could impact your money, your job, or your future. Drop a comment. Do you think Trump's right? Or is the Fed playing it safe? Let's talk below.